Hello everyone and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 31st of January. We had a bit of a risk rally into the close yesterday. It was really interesting actually because the WHO, the World Health Organization, declared that the coronavirus was an international health emergency. But also on the flip side of that, it suggested that China was getting the situation under control, and it was had the ability to reverse the tide. Was the quote it had. So subsequently, markets sort of settled down a little bit, and then overnight we've seen that Chinese economic data, the PMIs for China, had come out better than expected, and we've seen that the non-manufacturing, for example, was up. The manufacturing PMI held above 50, or at 50, I should say, but essentially not really deteriorating, which was a fear that obviously had been the situation through January. So that obviously has the potential to deteriorate further in February. But there was a sense of a relief rally early morning today, and we saw that coming through on equity markets into the close yesterday. On the S&P 500, sharp rebound into the close, over 1% higher from the lows. And that sort of translated initially to gains through the European markets. But you can see here that US futures are now down 0.4%, so that sort of risk rally has just started to dissipate somewhat. And we saw, for example, gold has started to pick up again. The yen has clawed back some of the losses against the dollar. You can see here the Aussie and the Kiwi remain under pressure. That seems to be the case at the moment, that certainly the commodity currencies are the way to play this coronavirus if the market fears continue to exacerbate. What we have at the moment is that broadly speaking, we're just slightly falling off the top a bit on these equity markets, and again, that the Chinese yuan, which had initially sort of started to strengthen again, has just weakened a bit. You've got bond yields that are trading around day lows on the 10-year and the 2-year yield. So that little risk rally is just dissipated slightly as the session has developed in Europe. Now, in terms of data points, we've got the European inflation data and growth data this morning for the flash numbers for January, and we have got, if I get my calendar going, the numbers are just coming out now, and they're basically coming pretty much in line with expected on the headline. On the headline inflation core data, just a slight miss on the downside actually, so that's not going to help the euro too much. In terms of GDP as well, a slight miss to the downside, so slightly negative numbers coming out from the Eurozone on inflation and growth today, and that's likely to just hit the euro a little bit as the session goes on. Now, we're looking this afternoon at the US inflation data, the core PCE, which is the Fed's preferred inflation measure, and that's out at 130. That's expected to remain at 1.6% in December. So that will be the focus this afternoon. But at the moment, we're seeing the markets developing a reaction to this European or Eurozone flash inflation and GDP numbers. Now, in terms of my chart of the day, Euro Kiwi. Now, Euro Kiwi has had a strong run actually, as the Kiwi has come under huge pressure, but it'll be interesting to see if this starts to slip back slightly on that European data that we've just had out. Now, we've had a base pattern. Look at this downtrend in place over the past sort of 3 months. It's been decisively broken with a base pattern completed now, which implies, well, a recovery back towards the 172 area on Euro Kiwi, and the market has moved decisively through that pivot line at 1.70, which was the December resistance, and it's decisively moved through that. That pivot line does now become a basis of support for any sort of near-term pullbacks. But you look at the momentum indicators; those MACD lines are about to accelerate through neutral. The stochastics are as strong as they've been since September. The RSI is up in the high 60s now, strong as it's been since September. So it really is a rally that is taking hold and just going ahead. And you can see here the market is actually bull flagged this morning on that breakout from the consolidation, so you could take that as a flag. This is analysis that I'm doing as we speak, and that implies 171.50 area. So we can see that there is still upside potential in this move here for this Euro Kiwi today. That near-term breakout 170.30, which was yesterday's high, that becomes a basis of support. And obviously 170 big figure as well, 169.85. So anything around that sort of area, I think, is a buying opportunity near term. You've got good support on the neckline as well at 169.20. So some good things coming out of Euro Kiwi at the moment as the euro just starts to sort of hold ground really. But the question would be whether you get a nice little buying opportunity from that eurozone GDP disappointment and inflation slip back. Not initially, but you could still see it playing out at some stage today. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.